Ladies and gentlemen, good day and welcome to the Q4 FY22 earnings conference call of Deepak Fertilizers and Petrochemicals Limited, hosted by Systematic Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pratik Tolia from Systematic Institutional Equities. Thank you, and over to you, sir.
Yeah, thank you, Steve. On behalf of Systematic Institutional Equities, I would like to welcome all the participants who logged into this Q4 FY22 earnings conference call of Deepak Fertilizers. From the management team, we have with us Mr. S.C. Mehta, Chairman and Managing Director, Mr. Mahesh Giridhar, President, Crop Nutrition Business, Mr. Tarun Sinha, President, Technical Ammonium Nitrate, Mr. Amitabh Bhargava, President and CFO, Mr. Suparas Jain, Vice President, Corporate Finance, Mr. Deepak Balwani, Head Investor Relations, and other members from the management team. At the outset, I'd like to thank the management for giving us the opportunity to host this conference call. I would like to now invite Mr. Mehta to begin the proceedings of the call by giving his opening remarks. After that, we'll open the floor for Q&A.
Thank you. You can hear my voice clearly?
Yes, sir. You're loud and clear.
Okay. So, a very good afternoon to all of you, and welcome to the Q4 FY22 earnings conference call. And I hope you have had a chance to look at the financial statements and earning presentation that were uploaded. So, at the outset, let me share with all the joy that the top line for the year grew by 32%, and we crossed a milestone of $1 billion in terms of the top line. And as far as the PBT goes, profit before tax, again a milestone that we crossed 1,000 crore rupees. So that gives a certain kind of joy. The operating EBITDA grew by 42%, net profit increased by 69%, and all in all, it resulted into a very strong cash flow available then for projects, which was around 1,200 crores, which helped us to reduce the net debt by around 400 crores. And looking at all this good results and looking forward to also the good times, the board has recommended upping the dividend from 75% last year to 90%. So now I was wanting to just broadly share that what do we see as the undercurrents? How did this happen? And somewhere to share some of those insights. So on the face of it, it is obvious that while we had some severe raw material price jumps, I mean unheard of jumps, ammonia jumped by 192%, phosphoric acid by 90%, propylene by 39%, gas by 58%. But we were in a position to enhance the finished good pricing also sufficiently enough to widen the delta. So that is at the face of it. But at an undercurrent level, some of the aspects that we see are these 5. So number 1, it got validated that all our products, whether it is the fertilizers, industrial chemicals or mining chemicals, all are beautifully aligned with the country's growth story. And, with that came in the positive current as far as the demand goes. So that aspect of it got established, and that was certainly a good support to make these operations, these results, to come in. The second aspect that got established was that, the 40 years of our working in this space and the efficiency in terms of the supply chain management, efficiency in terms of the manufacturing, cost optimization, all those in the challenging times of various disruptions, various COVID shocks, it also got established that those systems and those processes are indeed robust and they're indeed strong, and that also got validated by way of the performance. The third aspect that came in, and as we can see the results of it in terms of the results, financial results, is the emphasis that we had put on systems, processes, digitizing over the last couple of years and last year in particular. The internal world, we had put in a lot of emphasis on a sales and operation planning system where based on demand generation, one could plan right from raw material, inward logistics, manufacturing, outward logistics, market. So those systems in terms of internal systems, including the SAP HANA-based, dashboard-based systems, those certainly came in very handy during these kinds of volatile times. At the plant, we also brought in some of the smart factory digitization efforts. And at the external side, we have brought in, the Farmer Connect digitization efforts. So I would feel that these systems and processes also got tested and came in very handy during these kinds of volatile times and helped us. The third aspect, rather the fourth aspect that I see that certainly helped was the close proximity that we have with customers and understanding each customer segment, their needs, and their ability to absorb the higher prices. And that is something which, that understanding really helped us to, make sure that despite these kinds of passing through of the high prices of raw material, that we did not destabilize the end segment market. And, that aspect of it, we also saw that for our end customer, the impact of these prices are not very significant. So to that degree, we saw that gives an inherent long-term strength during these kinds of volatile periods. Last but not the least, and the most exciting part of our journey, which we pushed through last year, and we are going to be pushing through very strongly in the coming current year and the next year also, is our journey from commodity to specialty, or a journey from product to solutions. And in each of the three businesses, it panned out in terms of very strong ground level efforts. So based on certain kind of emphasis on applied R&D, in the fertilizer sector, if you recall from the earlier days of commodity NPK, we had moved 100% to smart tech, which is, a very potent, I would say, performance fertilizer, which gave phenomenal results. And from smart tech now we have, last year onwards and continuing this year, we are moving to crop specific. So we have branded as crop tech. So some of the crop specific grades that came in, and that is something that is giving us a very positive traction. In case of the industrial chemicals, acids and IPA, so somewhere we have, kick-started efforts for solar grade acid or steel grade acid. IPA we have, besides the hand sanitizer, now we have started, pushing towards the hospital segment. So there again, the move from commodity to specialty. Plus, of course, positioning the product for the pharma sector that we did for IPA. So that aspect also is something that certainly helped. And in the technical ammonium nitrate sector, the mining sector, we brought in ANFO-based, various cartridge products. We started looking at, again, from product to solutions, we started looking at the TCO, the total cost of the owner for a particular mine, and looking at innovative products that could help them. So this whole journey from commodity to specialty, or from product to solutions, is something that gave us, I would say, very positive tailwinds. And these are things that are going to be helping, even in the future. So with that, how do we look at life ahead? And we see that, these kinds of, I would say, volatile environment emerging out of raw material price hikes, Russia, Ukraine, is something that is going to haunt us maybe another 3 months, 6 months. But having now learned to ride the volatility, we feel that all the 5 aspects that I mentioned are going to continue to support us. We are also seeing that because of some of these stoppages of manufacturing last year because of COVID or sometimes a little supply disruption, we still have certain further capacities that we have not tapped. We could not tap last year, but they are available this year. Plus, we had kick-started some debottlenecking programs, which also we are seeing that, they will allow us a little elbow room in the current year. So those will come in handy in terms of, I would say, some additional, opening in terms of positive working. We are also seeing that with the China shift progressing, that there are some strong positive winds coming our way in the space of specialty chemicals who then require as their feedstock our nitric acid. And so that's something that we are seeing, again as a positive wind blowing with us. And lastly, and not the least, as we see even further ahead, that the investments, the projects that we have taken up, both ammonia and technical ammonium nitrate, those are going through very strongly. In fact, on the ammonia project, post having got all the land, having got all the environment clearances, with almost 95%, 97% of equipment having reached, and the EPC with Toyo, that project is going into a very strong, closure swing. And we are talking about, I would say, middle of next year, when we should be, moving towards commercial production. So with all that put together, this I would look at as kind of a broad brush, in terms of the background within which the good results have emerged. But more details, Amitabh will take you through sector by sector. And of course, the team is available for any question and answer after the presentation. Over to you, Amitabh.
Yep. Thank you. Thank you, Mr. Mehta. Good afternoon, ladies and gentlemen, and thank you for joining the Deepak Fertilizer and Petrochemicals conference call to discuss the Q4 FY22 results. Our growth momentum continued during the quarter, and overall FY22 was an important year for Deepak Fertilizers. We have come a long way in our journey to climbing the value chain strategy that Mehta was earlier alluding to, and the same has started giving us the targeted benefits in terms of revenues and margin expansion. We still have a long way to cover, and major further growth is expected from this journey and the upcoming backward integration to ammonia project. During quarter 4 FY22, we reported a total operating revenue of 2,012 crores, an increase of 28% compared to the same period last year. Our operating EBITDA increased to rupees 502 crores compared to rupees 273 crores in Q4 FY21, and operating EBITDA margins expanded to 24.9% from 17.3% during Q4 FY21. Our net profit for the quarter recorded a growth of over 144% to rupees 283 crores with margins of 14%. Finance costs reduced by 19% YOY during Q4 FY22 due to amortization of operating term loans and continued reduction of short-term debt. Overall, net debt reduced by about 400 crores during the year, and net debt to equity improved to 0.35x compared to FY21 when it was 0.65x. During the quarter, our chemical segment revenues increased from rupees 870 crores in Q4 FY21 to rupees 1500 crores in Q4 FY22. Segment profitability also improved from rupees 232 crores to rupees 523 crores in Q4 FY22. Manufactured mining chemical, that is TAN, business recorded a revenue of rupees 839 crores compared to rupees 400 crores in Q4 FY21. Mining chemical business delivered an outstanding quarter. Pricing of all products remains competitive. Margins in all segments, that is HDAN, AN-melt and LDAN, improved despite adverse impact of increasing ammonia and commodity costs. This was achieved on the back of good demand and better realization. As far as acids are concerned, we are in the process of segmenting the market depending on the concentration of acids, their application and different end user segments. The robust demand for nitric acid due to improved consumption and enhanced prices of downstream products helped in realizing better prices and margins. CNA, that is concentrated nitric acid and dilute nitric acid, NSPs in Q4 increased year on year through DNA production volumes were impacted, though the DNA production volumes were impacted due to ammonia unavailability and temporary mechanical limitations. IPA sales volume increased by 66% YOY in Q4, despite some production loss on account of mechanical issues. The propylene prices continued to rise. They rose almost 39% YOY, which impacted the IPA margin. During the quarter, our fertilizer segment revenues were 506 crore rupees compared to 702 crore rupees in Q4 FY21. Steep increase in raw material prices such as ammonia, phosphoric acid and MOP did impact the production cost of fertilizers adversely in Q4. We recently launched CropTech sugarcane and CropTech cotton on the back of successful CropTech onion launch in Q3 last year. During the quarter, our IPA plant operated at capacity utilization of 88%, and both acids and TAN operated at 77% and 100% respectively. In the crop nutrient segment, NP, NPK plants operated with utilization levels of 34% and Bensulf plant operated at 60% utilization level. Increase in raw material prices and disruption in supply chains were essentially the reason, as I mentioned earlier. The available capacity across our plants provides us headroom for future growth potential. And as Mr. Mehta was also mentioning, that we are also doing some debottlenecking in our plants, which should also give us the opportunity to further increase our production in our Taloja facility. Long-term growth is expected from our continuous endeavor to transform from a commodity to specialty player in each of the product segment, as Mr. Mehta was mentioning earlier. Increasing utilization levels, capacity enhancement and backward integration initiatives should also help us with the long-term growth. With this, we will be happy to take your questions. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Madhav Marda from Fidelity International. Please go ahead.
Yeah, hi, sir. Good afternoon. Thank you so much for your time once again. I had few questions. Firstly was on the, I think our production was impacted because of ammonia unavailability in some of the segments. Could you just help us understand like what is happening there exactly? And is the supply now normalized, or could we continue to see some volume impact maybe in 1Q and first half of FY23?
Also, we did face issues with ammonia because one of our largest suppliers had certain disruptions, particularly on the logistics side. And as a result, we had to then move to ad hoc supplies from some of the international players, as well as, we bought ammonia from local players who had surplus ammonia. But since I think April onwards, we've been back on track in terms of our supplies from one of our long-term suppliers. So as such, this year we are not anticipating. Of course, it's early days, but we are not seeing any challenge as such on ammonia. That's the situation on ammonia. MOP was another product or other raw material which had challenges. Again, I think partly it was logistics and partly also a good part of MOP also globally traded that comes out of Russia, Belarus. So that also we saw some disruptions. As of now, we've worked on some alternate sources, and for the foreseeable period, we do have the required quantity, but we'll have to see as it goes in future.
Okay. So our nitric acid capacity utilization in Q4, which had come to 77%, and the fertilizer NPK, which is at 34, that should largely normalize and come back to a healthy level now onwards, right? Basically.
Yes.
Okay, got it. Understood. And the second question was on the ammonia capex. I think a lot of companies are facing capex cost inflation because of steel prices, etc., going up. So have we largely locked in our capex at that 4350 crores for ammonia, or could there be like any escalation there because of commodity prices?
So we have a fixed price turnkey contract with Toyo. Okay. And what we understand is that as contractor, they had also tied up their metal purchase before this, inflationary trend came into metal. So we as such have contractually fixed price, so we don't see any risk. But even contractor on the back end has tied up its metal.
Understood. Great. Thank you so much.
Thank you. The next question is from the line of Pratik Vora from Mission Holdings. Please go ahead.
Hello, sir. First of all, congratulations for a super milestone which you achieved in this quarter. I want to understand, is there any specific one-off in terms of like our finished good price have moved up in light of raw material price movement, and we could have sourced the raw material at cheaper rate somehow? So is there any, how do you look at the spread between the raw material price and the finished good? And do you think that this spread may come off in coming quarters?
See, fundamentally, it was, I would say, it was a mixed bag as far as the raw material prices and the finished good prices are concerned during the year. So on one hand, increased raw material prices, particularly ammonia, phosphoric acid, MOP, impacted us on our fertilizer segment because one is, of course, the production was low, and also in terms of the margins, it resulted in squeezed margins. But in other segments like nitric acid, for example, where generally our pricing passes through the raw material prices, and also there was an impact, and we've been talking about this for the last couple of quarters, that because of China plus one, inclination of global supply chain, we are seeing the specialty chemical segment showing strong sort of growth, and that impact of that on the demand for nitric acid has been very strong. So we are seeing better realization in the spot market. And that we believe is so long as, and I think industry believes and so do most of the players, that this impact of China Plus One is something which is here to stay, because as we understand, some of our customers also have fairly long-term supply contracts with their customers. So we are going to see this nitric acid strong demand continuing, and therefore these prices or the margins should largely sustain, notwithstanding the movement in ammonia prices, which is the basic raw material for nitric acid. As far as TAN is concerned, I think TAN, it had, obviously, as the raw material prices went up, so did the finished good prices. So to that extent, TAN could not just pass on the raw material prices, but overall the margins expanded during the year. So this is how. So I would say that this is, and let me also say that in IPA, for example, while overall demand came back as the pharma sector, some of the challenges that pharma sector was facing on their supply chain started normalizing. The margins, because the oil prices went up, so did the propylene prices. Margins squeezed during the year. So we had I think we had both sides of this raw material price increase in our numbers. Some products faced headwinds, some had a little bit of a tailwind, giving us better ability to pass on the raw material price.
Right, sir. My next question is about the capex which you are doing, where you are saying that mid of next year this project should come online, two projects. What is the amount of capex we have spent, and what is the asset turnover we see in that particular project?
So we are looking at ammonia, as we have mentioned earlier, that this project is expected project cost is 4,350 crores. We have nearly spent 2,500 crores already, and balance, whatever balance, 1,850 or 1,900 odd crore is yet to be spent. As far as the asset turnover is concerned, look, I think ammonia as a commodity has seen cycles, and if one were to look at today's price, for example, and that's the price which would get in a way translated into revenue for the project, then we are talking about almost at current prices upwards of $500 million of revenue, which is almost, kind of, I would say, touching 0.8 to 0.9 x of the asset turnover. But ammonia is a commodity that will see its cycle in next 5 years, 10 years, 15 years, whichever way you look at it. And to that extent, asset turnover may vary year on year.
All right, sir. Wish you all the best. Thank you very much.
Thank you. The next question is from the line of Abhijit Akella from Kotak Securities. Please go ahead.
Yeah, good afternoon. Thank you so much, and congratulations on a great set of numbers. I just had 2 or 3 clarifications to seek. One is, in the context of the improvement in the debt number that we have seen already by end of this year to about 1,400 odd crores net debt, I believe. Given the capex program that is yet to be undertaken over the next year and a half, where do you see the peak debt ending up for the company now? Is it substantially lower than what you had originally anticipated, say a year or 2 years back before the numbers turned so strong on the earnings front?
So Abhijit, I think this is a question that, if you recall, I've always been a little, I would say, hesitant in pointing a number here. And the reason that is the case is that while both of these projects from a financial closure standpoint, we have a base case where we are looking at I would say ammonia, we used to earlier look at 60-40 debt equity. We are possibly looking at 50-50 debt equity ratio now. Likewise in TAN, while from a financial closure standpoint, we are tying up 70% of the project cost as debt. But given the kind of cash that we are generating internally, we are quite confident that the debt requirement in both these projects would certainly be below the base case that we have planned. To give you an example, we have, in ammonia, we have already spent about 2,500 crores. We require another 1,850 odd crores, and let's say another 2,200 crore in TAN. So put together, let's say another 4,000 crore of additional capex that is required in these two projects. We ended this year with almost 1,150 odd crore of cash. We generated roughly about 1,200 crore through internal generation. So run rate even more, if you look at very conservatively also, the run rate is somewhere around 250 crore per quarter. Now TAN is some project that we would be implementing over next 30 odd months. So if you look at the numbers, our current cash balance and the kind of cash that we are generating quarter on quarter, we do believe that we would not draw the debt that we are looking at from a base case perspective. Equally, we are amortizing our existing operating debt. So the numbers we believe will remain fairly within control, whichever metrics you apply, debt EBITDA or debt equity. And to that extent, while I'm not giving you a number, but I think you would have got a sense of that we are not going to go up to the levels that one would have envisaged in the beginning when we had announced these projects.
Got it. That's helpful. Thank you. And the other thing was just on the debottlenecking benefits that you had alluded to earlier on the call. Any further color you could provide, please, on what sort of impact this might have, say, in fiscal 23 or fiscal 24? How much capacity can we expect and how it might benefit us?
You're talking about the debottlenecking?
Yeah, that's right.
Yeah. So debottlenecking, one is in TAN, we are looking at in the first step roughly about 30,000 tons per annum kind of capacity enhancement. And by second phase of that debottlenecking, it will add another 45,000 tons from the existing facility. So put together about 75,000 tons. As far as the fertilizer is concerned, while we haven't because of different reasons in last 2 years, we haven't managed to I would say utilize our entire NPK capacity, but we are also debottlenecking NPK capacity where it would it would go up from in case of NPK, it would go up from 800,000 tons by another 100,000 tons or so. So overall, there is also capacity debottlenecking that is sitting there in NPK. But I think it's only fair that we first utilize that capacity completely before we start sort of capturing the upside through the debottlenecking in the NPK chain. But the immediate ones are essentially TAN, which I, as I mentioned, is 30,000 and another 45,000 in 2 stages.
Yeah, and by when are these getting commissioned?
Well, 30,000 tons is by and large we are ready with as far as the process is concerned. We are seeking some regulatory approval, and as soon as those approvals are in place, we are in a position to start producing that additional quantity. 45,000 tons additional would be, I think, by end of this financial year or between somewhere fourth quarter, third to fourth quarter.
Got it. And just one last thing from me. Any update you could provide us on the status of your gas contract negotiations for the ammonia project?
Well, gas contract today, while we do have the heads of terms available from 3 large gas aggregators, but at this stage, I would say, given the prices in Europe and therefore even the spot prices, we believe that there is more negotiation that is possible as far as the slopes are concerned. And to that extent, we are keeping the options of having spot gas in the initial phase and then tie up on a long term with these contractors. And it could be with the same contractor that we initially get into a spot kind of a contract, and then starting from subsequent years, we then move to the long-term formula. So that's the, I would say, a current negotiation that is on. This also depends on how we see ammonia prices panning out, because if the ammonia prices do come down from here, it is expected that even the gas prices, long-term gas prices and the slopes will also climb down. So we are keeping both these options open and in engagement with 3 different gas aggregators.
Got it. Thank you so much and wish you all the best.
Thank you. The next question is from the line of Yogesh Bhatia from Sequent Investment. Please go ahead.
Sir, congratulations on very good set of numbers. I have the question for the gas which we are going to need for the ammonia plant. So if we go for the spot pricing and if the prices are very high, how does it affect the economics? Is it like pass through or how does that work? And my second question is, in mining chemicals, we've seen the volumes are lower year on year, but the realizations are very high. So how sustainable do you think these realizations are? Thank you.
So on your first question, see, gas today, even for our current operations, we buy certain quantities of spot gas, and that gas is somewhere between, today we are buying somewhere around $20, $21. So at $20, $21 also, if we were to buy gas, our cost of production would be in the range of $650 odd dollars per ton. But if you look at the realization based on, let's say, CFR prices and some of the incentives built into our project through Government of Maharashtra Ultra Mega Project scheme, our realizations could be as high as $1,200 today. So today we are sitting on a delta of almost $550 to $600 odd dollars per ton, which is significantly higher than what we had planned for our project. So today, if you were to look at the economics between spot and ammonia prices, they are actually significantly better than the long-term economics that we had planned. But you know, this is a very sort of static way of looking at this project. One needs to look at this from a life cycle perspective, and that's where we go back to last 10 years of history, whether it is ammonia prices or gas prices. And I think we've discussed that, and we've sort of earlier also indicated those numbers. And those economics continue to be attractive based on what last 10 years, 15 years of experience. So as such, spot prices of gas, if at all today, given where ammonia prices are, things are looking better than what they were. But you know, this is, like I said, you know, we need to look at this more from a 10-year, 15-year perspective.
Okay.
Yeah, your second question on mining chemicals Q4, I think I've already answered that question, which is to say that you know, essentially in mining chemical, we've seen as much as the raw material prices went up, we also saw the finished good prices going up globally, and so we'll have to see how both the raw material prices and finished good prices pan out in the coming quarters. But the other aspect of mining chemical is what Ms. Mehta was alluding to earlier, that we are gradually going from product to product plus solution, where we are working with our consumers in terms of giving them overall blasting solution and not just a product. We are also going downstream in terms of manufacturing ANFO-based bulk and packaged explosives, and that's where some of these margins, or sustainability of these margins or expansion of these margins is where some of this would lie in terms of our downstream journey in time.
Thank you, sir. That should be all. Thank you.
Thank you. The next question is from the line of Pritesh Vora from Mission Holdings. Please go ahead.
How big this downstream journey, how big the revenue when you go ahead with the downstream journey for your explosive? Is it, can you quantify in terms of revenue?
Can we quantify it in terms of revenue? Actually, there are a number of areas within downstream that we are working on. So the kind of work that is happening in coal mining is very different from the kind of work that we are doing in, let's say, in infrastructure side. So it is very difficult at this moment to predict what will happen to, but what we are essentially doing is that whatever will be your TAN, pricing of your TAN, you are going one step further and you are charging your customer based on either the value-added explosives that you are manufacturing and supplying, or you are giving them a solution where, let's say, typically what happens in developed countries is where you take the entire blasting contract, where you design your, the whole blasting design is done by you. You take the product right down to the mine hole and blast it for the customer. So you in a way capture that next step, and there the pricing could also depend when you get into a solution-based approach. The pricing could also depend on not just a product plus, but it's more like the value add minus. So what value have you added in terms of reducing the overall cost of your customer, or you reduce the time in terms of in certain infrastructure projects, and your pricing could be linked with what value you are providing. So it's a little early, I would say, for us to make an estimate of what it would do to the revenue. But more than revenue, we are seeing this as a margin gain.
Right. And sir, second question is about your ammonia project. Whatever your assumption for the gas price and spread of between gas and ammonia or long-term basis, what should be considered in your project economics? What sort of return on capital employed you have considered when you envisage this particular project?
So we've looked at return equity IRR of I would say high teens and early 20s. Though today's economics suggests that those numbers would be significantly higher, but in our economics or in our internal calculations, we have gone by last 10 or 15 years average numbers, and that's where the equity IRRs are high teen, early 20 kind of equity IRR.
All right, sir. Thank you much.
Thank you. The next question is from the line of Vidit Shah from IIFL. Please go ahead.
Hi, thank you so much for taking my question. My first question was on the margins of the fertilizer business, which have significantly improved this quarter, despite volumes being down YOY and even manufacturing revenues, and given the challenges with input costs rising versus last year. So, what explains the growth in margins in the fertilizer business, and are these likely to sustain, in the coming years?
Yeah, so maybe Amitabh, I will try to answer this question. This is Mahesh Girdhar. I'm heading the crop nutrition business. So, as Amitabh already dwelled around that, we had seen significant increases in the raw material. And you also would have noticed that twice in the last year, the government of India intervened by virtue of enhancing subsidy. There was enhanced subsidy in the month of May, and again there was enhanced subsidy in October. So basically, raw material prices increase were basically there are three areas, three avenues whereby you look into pass through, either through enhancing subsidy as well as enhancing through the price changes, right? So subsidy particularly supported in the last 2 quarters. Plus, you may also notice that we have done a significant portfolio development with crop-specific solutions called Crop Tech. So most of our quarter 4 focus was on Crop Tech cotton, Crop Tech onion, and Crop Tech sugarcane. As well as in this period, we have significantly enhanced our manufacturing of specialty product, bentonite sulfur. Last year we had launched a enhanced version of bentonite sulfur by the name of Superfast Benson, which got established, and that gave us good advantage in the market. As well as overall impact on the margin also came from increase in our specialty product volume and pricing, right, which are non-subsidized, which grew by about 54% over last year. So coupled, all these put together helped us sustain better margins.
So any guidance you could give for margins, in FY23-24?
No, it is, I would say, I mean, the million-dollar question for FY23 is also how raw material prices would move. Because as Mahesh was mentioning, that realizations are a combination of our market prices, MRP, and government subsidies, and of course how raw material prices move alongside. So it's very difficult today, to give you an example. We are almost at the May end. We still don't have the phosphoric acid prices for India for quarter 1 decided, because that's something which government is directly involved in negotiating with the suppliers. So as we would see what kind of prices, raw material prices emerge in quarter 1 and then subsequent quarters, that perhaps would give us a better handle on. So given all these 2-3 parameters, it's I would say difficult to give any guidance.
Okay, understood. Just one question around the gross profit per ton in the chemical business, especially TAN and nitric acid. I mean, you alluded to passing on, rising raw material costs easily, but if you compare the gross profit per ton in 4Q versus 4Q last year, how much higher do you think, it would be in percentage terms versus what we were making last year in nitric acid and TAN?
So if you see I think that the answer to the question is in terms of Q4 segment EBIT, which was 744 crores, it's up to 1,164 crores. So that's the increase that we have seen in a combination of TAN and nitric acid margin. Overall, you see, one is in nitric acid also. Last year, this whole China plus one effect on the demand side of nitric acid came somewhere. I would say this started last year, but we got the major impact of that came in second, third, fourth quarters. So Q4 as such of last year compared to this Q4, there were significantly better margins because of the whole China plus one demand side panning out in the way realization we saw in the spot market. While the contractual customers, which are largely on cost plus basis, contractual basis, they remained. I mean, the contractually we could pass on those prices. some contracts also came up for certain revisions. So we got effect of that also in Q4. So there was a combination of factors that changed the margins from Q4 last year to Q4 this year.
Okay, fine, understood. And just one last question on any update on the sale of the Realty mall? Are we still looking to sell it? What the valuations currently are? What are we looking at there?
So well, valuation-wise, we've done valuation at different points in time. They were anywhere between 700 to 900 crores. But the real value is if there is actually a transaction, that's when you would know the fair value. As such, we are still working on certain regulatory aspects that we need to iron out before we could decide to do any transaction there. So right now, I think we are more focused on ironing out those regulatory aspects.
Okay, understood. Thank you so much for answering these. Good luck.
Thank you. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question, sir. So two questions on my side. One on, I would say on this ammonia side. Just wanted to understand your thoughts on this green hydrogen thing which people are talking about, and ultimately going through green hydrogen to green ammonia. So how this thing look viable for you as of now, and going forward, what would be your take on this in terms of your business?
So for us, the ammonia project that we are working on is grey ammonia, in a sense that we are manufacturing it through natural gas route. The green ammonia, which is where, let's say through hydrolysis of water, you produce hydrogen, and hydrogen also hydrolysis is done by renewable energy. Now, what we understand is that as far as the cost structures of green ammonia are concerned, they are still at a stage where, while there are players who have taken a view in setting up these capacities, there are others who are actually waiting to see what happens to the cost structure, because in renewable energy and trying to hydrolyze water on a 24-hour basis, you need certain storage technologies and so on and so forth. So today, for manufacturing the same level of hydrogen which is required for an equivalent of ammonia through gas route, you need a much higher renewable energy capacity, and to that extent, the cost structures today are significantly on the higher side. I would say, and these are very, very initial estimates as we hear from our project team, that the cost of manufacturing ammonia through green ammonia route could be in the range of $800 to $900 per ton. This is the cost structure, and therefore, while in today's ammonia pricing scenario, they may make sense, but if the ammonia prices were to overall go down from here, this kind of green ammonia would require certain carbon credit and the other factors to make it economically viable. So for us, it is grey ammonia, and the way we would want to create a balance in terms of the environmental aspect is to essentially increasingly look for investments into green or renewable energy for our operations. Last year, for example, we invested in one solar capacity, and that we are now buying power from that solar capacity. We already have some windmills, and it will be our constant attempt to diversify and to sort of tilt more and more of our power consumption towards renewable energy side. The other aspect which we are exploring is to use the carbon dioxide that we get generated out of our ammonia plant for enhanced oil recovery measures. But I think we'll have to see what are the plans of large oil majors before we could really on an economic way plan selling or transportation of CO2 to these oil fields.
Okay. Thank you for explaining, sir. Secondly, just wanted to understand on this TAN business. I mean, how we should look into this in terms of, revenue perspective. That whether we should go by order size or it is better to take it as on a utilization basis, that how much whatever the capacity would be there and similar would be the offtake. When the contract is basically done, this before or after, that is what I wanted to understand.
I couldn't really get your question. I'm sorry. Your voice was also not very clear, and I didn't get the intent of your question. Can you please repeat that?
Yeah. So in TAN business, how we go by how the contract basically is designed. Is it on a order basis or it is just a requirement as and when comes and we supply for them?
Tarun, if you're there, would you like to take that question?
Yes, absolutely, Amitabh. Am I audible?
Yes,
sir. Okay, good. So this is Tarun Sinha here from TAN business of Deepak Fertilizers. So basically, we run a mix of contract and spot business. That's the first point. So not 100% of our business is contracted. The mix of contract and spot varies from time to time, depending on the market situation. The market situation is defined by a number of factors. One of them could be the commodity prices. The second could be the overall demand supply scenario in the market, and so on and so forth. So then once we decide, to contract, then the point is how much to contract and how to contract. Those volumes which we get into contract for are also dependent on the market factors that I just talked about in terms of what's the demand supply, what's the raw material situation, so on and so forth. So it's not a fixed number at any point in time, in summary, in terms of what volumes we contract and how far do we contract for.
Okay. So we basically could not provide any order book kind of thing in this business.
Yes, because there is no one figure for this.
Okay.
Quarter to quarter, it will vary depending on the market situations, as I described just now.
Okay. So basically,
the net importer of TAN. So to that extent, one could, I would say, very safely take it that the production that any of the manufacturers do, including us, by and large gets placed in the market from a demand perspective.
Okay. And that's it from my side. Thank you.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. Sir, am I audible?
Yes, please.
Yeah, okay. Sir, I just wanted to understand last year, what has been the capacity utilization of our plant?
So last year, as far as the last year, as in you're talking about FY22?
Yes, that's correct.
Okay, so FY22 capacity utilizations, as far as TAN is concerned, it was 100%.
Hello?
TAN was 100%.
Yeah.
The CNB, that is our fertilizer bulk, was 62%. Specialty fertilizer was 60%. Our acids total were about 82%. And our IPA was about 90%.
So on an average, our capacity utilization would be about 90% plus, right? If you
on the chemical side, yes. Fertilizer, like I mentioned, the bulk was 62%.
Okay. And given our expansion is coming only by FY24 and FY25, is it something that this year our growth would be quite minimal? Now, assuming the ASP remains same, right? So any comment on that?
So, like I mentioned, that in TAN, one is even after 100% capacity utilization, this was perhaps only the second best capacity utilization in last couple of years. We have earlier produced up to 506,000 tons, which is roughly about 110% capacity utilization.
Right.
So that is doable even in the existing capacity. What I also mentioned is that our debottlenecking in TAN, the first phase of it, which is about 30,000 tons, from a process perspective is already over. We are just seeking some regulatory approvals to be able to produce that additional 30,000. And the second phase, which should come by second, third quarter of this year, is another 45,000 tons as far as TAN capacity is concerned. With CNB bulk getting underutilized last year to about 60-62%, there is definitely a headroom sitting there in terms of enhancement of capacity utilization. Equally on the specialty side, which is Bensulf, we are underutilized, and that's the market that we are enhancing every year. So that should be another segment of product where we have the headroom. Acid, while our overall capacity utilization was about 82%, we are also doing certain work on the acid side in terms of improving the reliability of these plants. And with ammonia supply remaining, hopefully remaining steady compared to last year, we also have a headroom in the acid capacity utilization.
Yeah. Okay, understood. That's great. So basically on the back of this debottlenecking and even TAN going up to 110% utilization level, so what sort of revenue growth we may look at in FY23 then, maybe 15-20% growth? Is that something feasible given this on this background?
So production is one, but the other aspect is what happens to the product prices. So it's difficult to predict in terms of revenue numbers what the numbers are going to look like. But if the prices remain at current level or what we saw in Q4, the capacity utilization or enhanced capacity utilization should definitely help improve the top line.
Okay, so assuming price remains at the current level, based on the volume, so what sort of volume growth one can look at overall in FY20? There 10-15% volume growth?
Actually, very difficult for me to put a number. I don't want to give you a guidance which, I can only tell you that in bulk, in fertilizer bulk, we were significantly underutilized, and if the raw material disruption does not occur this year, then there is definitely a scope there. And equally on TAN, there is a scope for higher capacity utilization.
Understood. And my final query on the margin front. Now, anything on the sustainability of this fourth quarter margin? I understand it's difficult because of the RM pricing, but in any sort of rough a rough comment that you can provide us on the sustainability?
Very difficult. Like I said, all four segments, IPA, nitric acid, TAN, and fertilizer, all of them could have a different dynamics going forward, depending on what happens to raw material. Like I was mentioning that some segments face headwind while the others had a little bit of a tailwind on their side. So a lot depends on what happens. But what I can confirm to you, or one area where we have a fair bit of confidence is on the nitric acid and TAN side, the demand remains strong. IPA, the demand side, which had in between had petered down because of the challenges pharma sector was facing, that came back in Q4. And if that supply chain side of pharma companies do not see another disruption, that IPA demand should remain strong, because IPA, as you know, India is a net importer. So as far as the local manufacturers are concerned, they continue to have the ability to place all their production in the market. So I think the demand side in each of these product segment remains very strong. We'll have to see how raw material prices pan out going forward.
Great. Quite useful, sir. Thank you so much for your comments and all the very best.
Thank you. The next question is from the line of Abhijit from PI Capital. Please go ahead.
Thanks for the opportunity. Most of my questions are answered. Just one question. Sir, when you say China plus one impact is here to stay, so does this mean when raw material prices go down, the realization will more or less remain around the current levels? Or it would also go back to the earlier level?
So when I say China plus one factor is here to remain, I would say one is based on the fact that a lot of our customers in the specialty chemicals segment are either looking at capacity expansion, or from their order book standpoint, they seem to have order book tied up for a longer horizon. So that's where the comment that China plus one is here to stay. Now, in medium term, long term, it's anybody's guess what happens to, because in any product, you could predict the demand supply situation for a period which it takes normally for new capacities to come up. And to that extent, in short to medium term, the margins that we are seeing in nitric acid, for example, should remain. What happens 3 years, 4 years down the line in terms of the new capacity, it's hard to predict. I mean, we ourselves may have, depending on what happens on the demand side, we, including other players, may also think of capacity expansion. So then what emerges after 3 to 4 years on the demand supply side is hard to guess. But in foreseeable future, short to medium term, we are seeing that the demand side remaining strong on the nitric acid side. TAN, in any case, we are a net importer, and we are seeing whether it's infrastructure, coal, or cement, all of these sectors should continue to see the demand. You may always have blips, as we saw in infrastructure in last few quarters. But on a overall basis, I think these three segments should continue to grow and see the demand from TAN's perspective. And we being the only producer of TAN in solid form, and our capacity expansion is already in the pipeline, we should be in a position to capture that growth going forward.
Understood. And apart from challenge on raw material front, what other challenges we are facing right now?
What other challenges? By and large, other than raw material, rather than challenges, I would say that the work that we are doing at the marketplace, the initial work, the market entry, all of that is fairly established. Next 2 to 3 years is when we would see the whole downstream journey or commodity to specialty or the product to solution journey is yet to pan out in next 2 to 3 years. I think that in some sense is a challenge that we'll have to I think take head on for next 2 to 3 years to really translate our downstream journey in terms of enhanced margins and market share. But other than that, we are actually not seeing any fundamental challenges.
Understood. That was helpful. Thank you and all the best.
Thank you. The next question is from the line of Ranjit Siromala from IIFL Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Did I hear it correctly that the debottlenecking in that time was through a process improvement, the initial one? And the second is what would be the capex that we would be incurring for this debottlenecking exercise for the phase 2 as well?
These capexes are fairly small compared to the greenfield capacities that we are spending capex. These would be somewhere less than 100 crore range, I would say. 50 to 60 crore, I guess that's the number.
Okay, and the initial 30,000 was through the process improvement?
Yeah, that 30,000 was through debottlenecking, which is essentially improving the capacity of certain equipment in the process, which was sort of the limiting factor.
Okay, thank you. That's helpful. Second, in the press release, you have mentioned that the improvement is also on account of the strategic initiatives that you have taken at the marketplace. So just wanted to understand whether these were more aimed at the volume growth or at the improving profitability.
So I think all of these we spoke in bits and pieces earlier. So the whole downstream journey in TAN is one aspect. As far as fertilizer is concerned, we launching crop-specific formulation is the market. I think the strategy that we have as far as fertilizer is concerned. In nitric acid, we are looking at more and more, I think, customer or consumer-specific formulation, whether it is solar-grade nitric acid or electronic-grade nitric acid. In IPA, we are looking at IPA, which is pharmacopoeia compliant and therefore commands better margins and pricing in the marketplace compared to commodity IPA. We are also, as part of our downstream journey in IPA, we are also our Fluid brand, which is essentially hand sanitizers and a number of other segments or product segments which are aimed at largely at institutional clients, is also the other market intervention or market work that we are doing. So these are all of these are what we meant by strategic initiatives at the marketplace.
Sure, sir. Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Pratik Tolia for closing comments. Over to you, sir.
Yeah, thanks, Stephen. On behalf of Systematics and Institutional Equities, I would like to thank all the participants who logged into this conference call. I'd like to once again thank the management for giving us the opportunity to host this call. I would like to now ask Amitabh sir if you would like to make any closing comments, please.
Well, thank you everyone for your participation. Also, the line of questioning from your side was quite insightful. For any further queries, or clarifications, please do get in touch with our investor relationship team. And thank you so much for your time and patience.
Thank you so much, sir.
Thank you. Ladies and gentlemen, on behalf of Systematics Institutional Equities, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.